Simplicity is the prerequisite for reliability. Edsger Dijkstra. And Edsger is right on it. Simplicity, that's what we shoot for every single day. If you want reliability, you have to obey Occam's razor. And Occam's razor tells us that the simplest way, that's what nature does, is the best way. It is the most reliable way, and that is what we count on every single day as we chart these markets. We separate the signal from the noise. We use the price percent oscillator, the derivative oscillator, Heikin-Ashi candlesticks, Bollinger Bands, and of course our trend lines, and we look for the number one signal is a weekly vertical crossover. Have you guys noticed? The weekly vertical crossovers for this entire year have never been wrong. Not a single wrong signal. That is absolutely beautiful. We had one attempted crossover, but remember, we never had a jumping in point on it. Bounced off the following week, so we never entered a trade on it. And again, I want you to follow with us, keep us honest, be with us every single day, 10 to 15 minutes. Special training for everyone who is signed up. The big picture, I want you to have that. How do you sign up? You go to chartingwealth.com, put in your name, email address. List is never spammed, never shared. It is just for us. So go there. You'll get all the special trainings, plus you'll get in your email box every single day this very, very valuable daily review. Also our weekly review and forecast, and like we said, all the special trainings. We recycle some over and over and over again because they are immensely important. And then, of course, we're producing new ones all the time. And I want to encourage you, go back to the most valuable ones. People say, what are the most valuable ones you have? The price percent oscillator, understanding inverse funds, making sure that you understand our training. 150,000 people have taken the training on Heikin-Ashi candlesticks. We've got lots of good trainings there. The top trainings in the market. The top you'll find on YouTube. Why? Because we work very hard to keep it simple and to bring you what you need. Now, let's talk about where these markets are. We have weekly vertical crossovers in effect going down on QQQ and SPY. That's the Nasdaq 100 and the S&P 500. But look at what we have happening. What did we tell you? Expect roilings in the markets. It's crazy out there, folks. Europe has adopted negative interest rates. That means you pay off your mortgage on a 10-year loan in Denmark and they give you money back. Can you possibly figure that out? You can borrow $1 million in the UK for $6,400 a year, something like that. I mean, crazy, crazy stuff going on. So what do? We watch these markets and we expect craziness back. Why? Because our government is trying to keep the markets up and don't want to see them crash. We have three bubbles in effect right now. The stock market bubble, the real estate bubble, and the bond bubble. It is a crazy world. I have been working throughout the weekend, all last week and today, starting to prepare. Well, I'm a good bit through the preparing of our 3-month course on everything. The first is on technical analysis for the first month. Second is on options. Third is on building your own personal wealth fund, pulling it all together. We're working hard to get that ready for you. We'll be announcing it later as it comes out. You know, folks, I've realized I have made a mistake here at the channel. And that is thinking that I could simply teach you day by day enough that enough people could get this in enough time for what's coming. And what is coming is bad, my friends. I have already recorded the big training on the coming market crash, talking to you about what's coming our way, and it's going to be bad. And I don't want you simply to survive the market crash. I want you to thrive. You guys, probably a lot of you have seen that movie, The Big Short. There was an obituary in the Wall Street Journal this last weekend on one of the big traders. Convinced his friends to put in $60 million, made for them $20 billion. That's incredible. That's like giving somebody $600, they give you back $20,000. Okay. He did incredible things. Why? because he saw what was coming, prepared for it, didn't just survive, but thrived through the real estate bubble pop. Well, real estate is now more inflated than it was in 2008, plus the stock market is, plus the bond market. I mean, do you think negative yield curves make any sense at all? No. They always portend a recession. It's going to get bloody out there. We, my friends, those of you who choose to train with us in this special 3-month training, you're going to be ready. You're going to be ready. Now, let's jump into what's going on. S&P up for the day, 1.2%. Now, still have, if we look at our weekly chart, the price percent oscillator still moving down. Derivative oscillators gaining downward momentum. First day of the latest the latest weekly candle is what? It's a green open box candle saying that's pretty decent up movement, up 1.20%. Totally contained in the prior red down candle when we had the weekly vertical crossover and the solid green candle of the prior week. So doesn't mean that everything has turned around. It could be. But again, what did we make on these incredible trades? What did these things offer to us? Lots and lots of benefit. What was it, $11 in the S&P 500 on that movement? It was beautiful. And again, we go to the 2-day chart. What do we see there? We see things sliding sideways. That last 2-day candle was a strong down candle. We have a green spinning top at this point. The price percent oscillator is heading up. So, of course, warning bells have been going off since Friday. We talked about that. We'll see when we go to that 4-hour chart. But again, still plenty of room for you to have been in the profit center, but things are pulling back. Derivative oscillators losing momentum. Perhaps you've sold all or parts of your positions in your practice trade. Again, pay attention. Tomorrow should tell you a whole lot more about where things are going. But that green spinning top tells us indecision tending up. Now, we've seen that happen previously on the 2-day candle ending the 9th and the 13th of August, and then a big drop after that. So watch and see. Pay close attention in the morning as to what's going on. Now, we've seen for the last 2 days strong up movement. Alarm bell, of course, went off this morning when we pushed through the 2-day trend line. Those of you who want to know, how do I figure out when to get out of trades? What did we tell you on Friday? Watch the 2-day trend line and watch in particular the 200-period moving average line. Things blew through that and then stayed above it in the afternoon. That's important. Now, again, watch things. You can revert back to that 2-day chart if you want to keep a small position in what's going on and be ready if things do rotate over going down and that 4-hour chart crosses back over going down, or you just want to ride. Because why? Still got that 2-day chart that's positive, and this is the reason we practice these things. And the weekly chart that's still positive. So there's still huge downward pressures on the market. Plus, remember our quarterly chart? It crossed over going down all the way back in December, and that downward pressure has been there since then on the S&P 500. So again, the market's beautiful. It's gyrating. It's doing exactly what we want it to do. Why? Because it's leveling off, gaining a little bit, and we'll see which way it accelerates. Again, pressure still downward. We go to the Qs, up even more than the S&P 500, 1.59%. And again, we see a green open box candle portending stronger upward movement. Price percent oscillator still heading down, but again, not at the angle that the S&P is. And again, it's more up for the day. It's just the first day of the latest weekly candle. Derivative oscillator, however, still gaining downward momentum. Go to the 2-day chart. We can see that the price percent oscillator there is heading up. What do we see happening with the 2-day trend line? It's being pushed through on the latest 2-day candle. So again, paying attention to that. It's a green open box candle. It does have a wick on the bottom and a big one on the top. We go from the 2-day chart to the 4-hour, and again, we saw things blow through both the 200-period moving average line and the 2-day trend line on that weekly chart, continuing to accelerate up, reaching a high around where things were back on Tuesday the 13th. So again, pay attention, keep watching, see how things settle out. If you still have a position in the S&P 500 or the Qs in the morning. Again, these markets are crazy. They may very well just roll back over again. That pressure, downward pressure, is still there. Now, what's going on with TLT, 20-year bonds? We see them starting the week off with a little bit of a pullback, down 1.43%. We have a red open box, not a red down candle, but a red open box candle showing things slowing. And we see that the price percent oscillators lost a little bit of its steam. Derivative oscillator, however, still heading up. We go to that 2-day chart. We can see the same thing with a red open box candle. We saw that happen, however, back on the 2-day candle in representing Monday, that would have been the 6th, and Thursday the 8th and Friday the 9th. We saw a pullback there at the same time. Then things shot up for another 4 days after. Price percent oscillators flattening out a little bit, derivative oscillator losing momentum. So keep your eye on things on bonds. Bonds have been our biggest accelerator, just crazy what they have produced. And look, we had a crossover going down in the morning on that 4-hour chart. Price is still above the 2-day trend line, so watch in case that's penetrated. And then we had things bump up in the afternoon, so the losses weren't any more than they were. Pay attention to all that. If you're still riding that bond train or have a position in it, go ahead, keep your eye on things. May very well start back up tomorrow. Watch that 2-day trend line being penetrated. Now, go back to the weekly chart. Head to gold. Gold down for the day, 1.17%. Again, like bonds, we got a red open box candle. We see that the price percent oscillator is losing some of that upward momentum. Derivative oscillator burning off energy. We go to the 2-day chart. And again, we have a doji sitting right there on the 2-day trend line, means indecision, tending down. And we see, of course, that the price percent oscillator is heading down, hasn't crossed over going down. Derivative oscillator still quite positive, but losing energy. So keep your eye on that. Again, if more penetration, particularly on that 2-day chart through the 2-day trend line and that 2-day crossover happens, then of course, you give that close attention when you're dealing with gold. And then lastly, we look at the 4-hour chart. What do we see going on there? Well, gold topped out back on Thursday in the afternoon, down on Friday morning, a little up in the afternoon, down both morning and afternoon, pushing through the 2-day trend line, popping back over on gold. So on the 2-day trend line, on the 4-hour chart. So again, derivative oscillator gaining downward momentum, price percent oscillator still heading down. And of course, once we pulled away from that laminated, we had a lamination of the price percent oscillator on our signal line. So again, once that started to pull away, it became very obvious. So keep your eye on that 4-hour chart and on that 2-day penetration. And of course, on the next bigger chart, that 2-day chart. See how gold continues to develop. If it starts to rebound, if stocks start heading down strongly. Of course, gold is tested up to about 144, and we'll see if it's going to go test that again and perhaps exceed it. Folks, that's where we are as we wrap up the day on Monday and start this week off, getting more exciting as we move further and further away from the depths of summer and that summertime trading zone into the transition zone and the fall-winter trading zone where things are beautiful. And again, keep your eye on the market every single day. 10 to 15 minutes with us is all that we ask. You haven't purchased our book, Charting Your Way to Wealth? Do so. 12th printing now available, autographed copy waiting for you. You want to understand what we do and supercharge your training? You can do that first by buying the book. We have a copy for you. Just follow the link in the show notes. Of course, if you want to be a Patreon supporter, we very much appreciate all that support. We have all sorts of great things for our Patreon members, including things like our Bitcoin chart and our Bitcoin training. We also have our short chart training. We also have our quarterly chart training for long-term investing and understanding, plus our monthly question and answer session where our Patreon members join me for a live call-in, and send us the stocks and ETFs you'd like us to review for you. We put together a special video each month for our Patreon supporters. Folks, that's where we are as we end the day on Monday. God bless you all. All the best from the whole team here at Charting Wealth World Headquarters.